So, the final numbers for the US economy in 2025 are in. And honestly, they tell a pretty complex story. We're looking at some sluggish growth mixed with inflation that just won't seem to quit. In this explainer, we're going to break down all the key data points to really understand what happened and, what it all means for the year ahead.
So that brings us to the big question we're tackling today. Just how healthy was the US economy last year? Was it in great shape, maybe running a marathon, or was it kind of struggling to catch its breath? Well, the data suggests the economy is really at a crossroads.
All right, here's how we're going to figure this out. We'll start by checking the economy's pulse, looking at GDP. Then we'll try to piece together the whole trade and tariff puzzle. After that, we'll take the temperature on inflation, see what's happening in the job market, and finally, we'll look ahead to what we should all be keeping an eye on in 2026.
First up, let's dive into the broadest measure of economic health out there, the gross domestic product, or GDP. This is pretty much the headline number for the entire economy.
So what is GDP exactly? Well, think of it as the total price tag on everything produced inside the US over a certain period, from cars to coffee to haircuts. It's basically the economy's main scorecard. And here is the number that really raised some eyebrows at the end of the year. The economy grew at just a 1.4% annual rate in that last quarter of 2025. I mean, that is a very sluggish pace.
And to put that number into perspective, you can see that for the whole year, growth was only 2.2%, which is a small dip from 2024. But here's the real story. Both of those years fall pretty short of that 3% line, which is what we typically consider to be a sign of a truly healthy, robust economy.
So what gives? Why the weak finish to the year? Well, a lot of economists point to one key event, that government shutdown in the fourth quarter. It makes sense, right? When federal workers aren't getting paid, their spending drops off, and that puts a direct drag on the GDP numbers.
But that slowdown in GDP wasn't just about what was happening at home. To get the full picture, we really need to look at the super complicated world of international trade and tariffs.
Let's start with a massive number. In 2025, the U.S. imported a record-breaking $4.3 trillion worth of goods and services. That's huge. It's about 5% higher than the year before, which just shows you how much of an appetite there was for foreign products. Now, this is where the numbers get a little bit tricky. The overall trade deficit, which includes both goods and services, actually went down slightly. But, and this is a big but, if you only look at the physical goods, that deficit exploded to a record $1.2 trillion. And really, the story of trade in 2025 was all about tariffs. You can see this really clear pattern. There was a huge surge in imports late in 2024 because companies were rushing to get ahead of the new tariffs. Then, bam, trade tightens up when they hit in April. And then, as most of those tariffs were pulled back, things kind of went back to normal. It just goes to show how directly policy can mess with the flow of trade.
All this talk about tariffs leads us right into our next big topic, inflation. Because let's be real, when the goods coming into the country cost more, that often means higher prices for all of us at the checkout counter. And this isn't just a hunch. This is a direct quote from the U.S. Federal Reserve. You know the folks in charge of managing inflation? This is what they said at the beginning of this year. It's a pretty clear warning that this fight is far from over.
So, what's keeping prices so high? Well, if we look at what's called core inflation, that's where they strip out the volatile food and energy prices to see the underlying trend. It rose to 3% in December. That's a full percentage point higher than the Fed's 2% target. And what's the main driver? Us. Strong consumer spending, especially on essentials and services, kept demand really high, even while people were hitting pause on buying big-ticket items like cars or appliances.
Okay, so far we've been talking about these big economy-wide numbers. But now let's bring it down to a more personal level. Let's look at the job market and how all these trends are actually impacting American workers.
The simple truth is this: the job market is tightening up. That hiring frenzy we saw in the years right after the pandemic, that has cooled off in a big way. And this slowdown seems to be coming from a perfect storm of three big pressures. First, those tariffs we talked about are making things more expensive for businesses, so they're a little hesitant to bring on new people. Second, let's face it, the post-pandemic hiring boom was never going to last forever. And third, there's this growing uncertainty around AI and what it's going to do to the workforce.
Now get this. This is a truly stunning data point that just shows how widespread the slowdown was.
Across the entire U.S. economy, with all these pressures squeezing from all sides, only one single industry actually added jobs. Just one, and it was healthcare.
So, after taking the pulse of the economy in 2025, the big question is, where do we go from here? Let's wrap things up by looking at the key things that are going to shape the economic story of 2026.
Looking ahead, there are 4 key things to watch. There's a proposed 15% tariff on all imports, which could seriously shake up supply chains. The Fed's decisions on interest rates are going to be huge in the fight against inflation. Consumer spending is a big wild card. Are people going to keep buying, or will they finally pull back? And of course, the great unknown is just how fast AI is going to start reshaping the job market. Which leaves us with the ultimate question as we look forward, doesn't it? All of this data points to an economy that's really at a tipping point. With all these challenges, trade, inflation, a tightening job market, are we just heading for a kind of reset to a new normal, or are we actually on the path to a full-blown recession? I guess only 2026 will tell.